Hello, hello everyone. Can you hear me? Hello everyone. Can you hear me? Hello. Okay. Okay. Uh, Hi everyone. This is Charlie Tian. I'm the founder and CEO of Guru Focus, and I'm very glad to be here again to talk to you and to meet you. And I already see some familiar names there, and that's really great. And love to hear from you. And I'm based in Plano, Texas. Tell me where you are and say hello to me. I love to hear from you and love to see all the names that's there. And yeah, let me know. And as always, during my talk, you can ask any questions, and I will share my thoughts as much as I can, and try to answer all the questions. Uh, Nice to see you, Ed. Thank you for coming to the session. Okay. Yeah, lots of people. Thank you all. Uh, Before I start, I want to comment a little bit about what's going on in the market. We know that there's a new war going on, and that's kind of unexpected. And the market certainly was affected by the war. And this so far this year, the SP 500 is about flat, but lots of companies that used to do well, like capital light software companies, were hit by the AI scare, and the market is kind of different. But we also heard one sentence that was, I think, said by John Templeton. He said that the most expensive four words in the stock market is this time is different. So it might not be different. Yeah. And let me review the market with you first, and I will share my screen with you. Yeah, please come here to see. This is my screen. And my screen might be different from yours uh, because the, we're only allowed to share one screen. I mean, sorry, it seems like yeah. Will you need to turn on my screen sharing function? Okay, let me try again. I'm trying to. Okay, now it works. Yeah, I'm sharing my screen now. If you look at my screen might be different from yours because our homepage is fully customizable. And you can see that this is a market overview of today's market overview. And I will show you where you can see that was for this kind of chart, you can get it for any time periods, not just today's, and different sector performances, the insider trend. And I love to talk about the insider trend chart. At this point, insider seems not buying much at this point. If I expand the chart bigger, this green bar measures the insider buy sell ratio, and the insiders are not buying that much these days, but they were buying. You can see that during the pandemic, during the 2019 market correction, especially during the 2008 market downturn and market crash, they were buying a lot. This green bar again measures the buy sell ratio, and you can find this first on the homepage. You can also find it on the insider type here, insider trends here. And you can see that when we have the overall market and then the CEOs and CFO also for different sectors, we all have this kind of chart. You can, for different sectors, behavior can be different. Yeah, this is some, yeah, check here. As always, I said many times, when you get scared, and check it out here to see what the insiders are doing, and it works really well, especially during market panics. Okay, now first I want to show you the overall market performance actually. And if we look at here, and if I turn this chart to year to date, here it shows a major major stock markets in the world. The USA first, the energy sector has been doing well. The basic materials, utilities are doing well. Energy, we all know that, yeah, oil price is going up. Basic material, yeah, gold and metal, all the metals are going up. Utilities are going up because of AI demand of the electricity. And then this here you can see different sectors performance and in different market sections. Large cap, again, large cap has been doing pretty good. Mid cap are doing better than last year, at least. Small cap are doing better than last year. Here you can see the market, the Chinese market. Also, energy went up the most, the utilities and the Chinese market. The real estate is doing poorly. Consumers related products are doing poorly. Industries are doing poorly in China because of the deflation. But energy went up. That's the international market. Utilities are going up because of the AI demand, I think also. German market, yeah, similar. Energy has been doing really well everywhere because the oil price is more international commodity, not much decided by local economies. And basic material also say similar. And Japan market overall is doing pretty well this year. And most of the sectors went up. And yeah, the technology sector is not doing really well. India is doing poorly this year. Everywhere is going down. And the UK market similar to Chinese. Similar to Chinese and US market. Actually, the market overall is about flat, but energy commodities all went up. Italy similar. Canada, yeah, similar. Yeah, this year the best performing sector has been energy, and the related industries are doing well. Large cap are not doing as well as it were last year, but they're still doing about flat, I think. Okay, that's the industry, and then you can dig into different different countries, dig into it, and to see, for instance, we said that energy went up. Let's take a deeper look at energy companies. Yeah, that's here you can see the energy. You can see different sectors, and it has different industries, oil and gas and others. Oil, gas, and others. And we also have the valuations. If you look at here, I want to show you the valuations of the different industries. And we have so many matrices that measures it. There are different sector in the. For instance, if I want to see the Shaler P ratio to see which sector the cheapest, you can see the basic material forest products are cheapest. Financial service, credit service is cheap. But then if you look at the expensive side, the Shaler P, I think mirror long-term ratio, it works pretty well. The sensitive construction is expensive, defensive expensive. I mean, healthcare is expensive, technology expensive. Yeah, that's measured by the Shaler P ratio. Of course, you can also check out the dividend yield and other ratios. And here you can see the different sector performance of over different periods. Here we only show the best performing ones and the worst performing ones. This year, SP 500 is about flat. And if I turn on other sectors, you can see the financial sector and consumer defensive. If I change to year to date, this year, again, the best performance sector is energy and the IYM, which is consumer IYM, basic materials. Yes, here. That's I can see the sector performance as measured by the ETFs. Yeah, as always, whenever you have questions, feel free to post it in the chat box, and I will look into it, and I will certainly try to address your questions. Okay, and let me see. I see one question. In GF value, the D over E is calculated by short and long term debt in capital. Okay, I will get back to that later. I'm not sure what exactly it is about. Yeah, feel free to ask me questions about companies too. And another thing I want to show you, although we have lots of long-term members, but they are not very familiar with our most powerful screener here. The most powerful screener, and lots of functions you may now know. And for the screeners, we have multiple tabs, different tasks covering different aspects of the fundamentals. Here, the fundamental, the valuation ratio, and the estimates data, the forecasts, and the profitability, growth, valuation rank, and price performance of the different companies, and dividends. You can screen by all of this, and also insider actions, buy and sell actions, and the gurus, what they're buying and selling. You can screen by all of this. And if they're not enough, you can also screen back. You can also create your own customized filters. And we have created many pre-existing screeners here. For example, one of my favorite is good companies. And if I just select good companies there, the related filters are populated automatically. You can see it says it only limit to certain industries, and it requires return on capital at least the 10-year median 14%. And also the profitability, there are some requirements. The 10-year operating margin at least 10%. 10-year margin growth, at least margin is stable, at least not shrinking. And also there's growth requirement, earning per share 10-year average 10%, revenue growth at least 8%, things like that. And here you can see that we got this list of companies already. They're ranked with market cap, sorted with market cap, I believe. And here, and that's good companies. You can do backtesting. If there are actually 4 powerful tools I want to share here. One is the backtesting. Yeah, you can do backtestings with our all-in-one screener. And here, default 10 stocks. You can of course change it. And it's ranked by market cap from large to small. You can change that too. And you can, start date, it goes all the way to I think 2006. And you here for the simplicity purpose, I will just do it last 3 years and 6 months rebalance. If I just do that and click on go, it will start working, and it will show you the performance after calculating different periods. You can see it's calculating right now, and it will show you the performance of this strategy after it's done. Every 6 months it rebalance. So that's why it calculates every 6 months periods, and it's doing the for every 6 months it redo the calculations, the screening, and the rebalance the market. And now it's done, I think. And now we look at the performance. Can look at the performance after it's done. Okay. Oh, it's doing the last one now. It's almost done. And that's a backtesting function we have there, because now I have 20 stocks, so it's fetching performance data. Okay, now it's done. And you can see that for this strategy, if I did 20 stocks, and the performance is actually this. If I turn off the performance is actually this blue line as measured by this blue line. and the SP 500 is here. So if I turn that, yeah, SP 500 is here. So I just randomly select a strategy. The good companies, if I did 20 stocks, it seems like underperformed this year. As actually this year, as actually the good companies are underperforming. It used to outperform previous years. And here it shows you different years of performances. So here I just want to show you the backtesting function here, and it's survival bias free. Okay, now we also have for the screener, we also have a very powerful function which most people actually I still get questions from our users. If I just start over a new screener, and a screener, lots of times people want to know, like a company which can grow their sales, not just average, but year over year, every year. So, for example, a company which can grow their sales from 2022 every year for at least 10%. So if I just change that, it's doing the work already, and I close this window, and it's already doing the work. It will find the companies that have been growing the revenue every year, year over year for last since 2022. It screens from all the historical data, and then it will display the results. Let me see. Yeah, the results is here. Results is coming out right now. It's still doing the work. And yeah, it's displayed. We can already see that the data, the first company is Microsoft, and the second is Visa, then Mastercard, Hermes. Okay, it's a luxury brand. Novo Nordisk. It's a Norway drug company. Uber, interestingly, Uber is there. Okay, not sure why it's kind of slow right now. If I add a limitation, if I limit the sales at least 20 billion, for example, and it's 20 billion, also growing 10% every year. Now, okay, I got a shorter list. Microsoft is first, Visa, Mastercard, Uber is here, very interesting, and PDD, which is a Chinese online shopping website, and bookings. Okay, Adobe, very interesting. Meli, which is more like a Southern American Amazon, doing actually more things than Amazon. Can say that those are the companies that can grow their revenue year over year, every year since 2022, and actually combines with other parameters. I start over here. I just start over here. Seems like some filter are still there, and not just sales. For every parameter you can think of, you can do those kind of screening. For example, profitability. You can do the margins, and here fundamentals. If you are looking for any filters, you just type it here. So I want earning per share. Yeah, it's earning per share here. And if I want earning per share growth from 2022, at least 10% year over year, every year. So not just average growth. It needs to be every year. And it's finished already. Okay, again, Mastercard is on the top. Eaton, okay. Banco, this I think is Spanish, South America Bank. Some interesting companies. Centus, okay, it's a uniform company. Interesting. Okay, then you can see the results, not just in list, you can see it in charts. Just see it in chart. If I just click on the chart function and see the performance, okay, although Mastercard is business doing really well, but the stock is not doing really well this year. And the chart here, you can display multiple charts, not just not just those chart I was showing. You can show you can display multiple chart. For example, you can display a median PS chart here. I just confirm here the chart will be added at the end. It will be added. It's added at the end already. And yeah, the stock has not been doing well for Mastercard this year, but the business has been doing really well. That's a historical screen function I want to share. We also have the ranking function. For example, now the stock is ranked. The default is market cap, but you can rank it if you want other parameters. For example, we have a rank. You can combine the different ranks. If you want to combine, I just cash to that. For example, I just randomly select a few and book value per share. Just random select. You can rank it by a combination of ranking. Here, if I just want earning per share and cash per debt per share, and it will rank itself. And that way, I think I will start with the new screener to show this function. If I want sales at least 50 billion, and I want profitability, the margin, gross margin, 10-year average gross margin at least 20%. This is what I want because I want I like high margin businesses, and I want the growth. 10-year average, 5-year average, for example, at least 15%. Now I got the companies I want, but I want to rank it not by market cap or anything, or maybe a combination of parameters. So I rank it here, add those two, and then okay, the rank should create. Okay, I give rank a name. So yeah, it's ranked already. Can see that I combine the gross margin, the 5-year earning per share growth, and now it ranks 1, 2, 3. It ranks the company with this rank, overall rank. It's called overall rank here. So the ranking factor doesn't have to be a screening factor, but it can be used for ranking. Hope you will like it. Okay, now I'll get back to the questions. I didn't understand some of the questions. Let me look at. Okay, Jadis is talking about Audity. Okay, and tech appear as a consumer tech company that build digital first brands for beauty. Yes. Okay, I'm not sure what's your question. Yeah, I know this company very interesting. One of my college friends, his daughter was working for this company, and she is in her 20s, I think, and graduated from Wesley and went to work for this company as a director of design or something. And she went there pre-IPO and became financially free after the company went to IPO, and she, got made lots of money in her 20s. That's really lucky. Works for Audity, but I don't know much about the company. I'm not sure what's your question. Okay, Brian, I didn't understand the question. Tom, in GF, the debt to equity is calculated by short and long-term debt and capital lease obligation divided by short-term shareholder equity. Why do we use that traditional total equity, total liabilities? Debt to equity, yeah. I think this question can be addressed if you can open a ticket. I think that would be better. We can of course look at a company, look at the 30-year financials like Microsoft here, and look at the debt to equity, and to see some difference. We can certainly look at that. We go to their balance sheet, I'm going to the balance sheet. We can see the cash, the debt, and equity here. And we are using for the liability debt to equity. We are using short-term debt and long-term debt, not using the total liability. But I think the total liability includes lots of things, uh, like lots of things that's not current. That's I believe total long term. But I need to. I don't know. I don't know exactly. But yeah, please open a ticket flag. I believe our data team will give you a good explanation there. South Mercado Libre, Mali. Yeah. Okay. I own this company actually. I own the stock for the company. I bought, I think, around 1200 a few years back. Yeah, the growth is tremendous. The business growth is tremendous. Of course, the environment is not that friendly there, and the economy is not as stable. But I think I still like the company, and I like the growth. And the stock is not doing really well this year, but has been doing well. Stock go down some recently. Yeah, long term has been doing really well. The stock, the growth is just there, still growing like 40% or something. Let's look at EBITDA growth, earning growth, all like 40%. Yeah, I like the growth. I do have kind of I do have investment in this company. Okay, yeah, and it's actually doing a lot of things that Amazon is not doing. It's doing payment related consumer credits. I think the stock went down because of consumer credits. Um, okay, and how about Real Brokerage Inc? Okay, let's take a look. REAX. Don't know about this company, and let's see what it does. The business description is a technology-powered real estate brokerage firm located in U.S. and Canada. Okay, brokerage operating software, Argent. Okay, Argent, it develops software of which powers nearly all the brokerage account flexibility. The company operates. So it's a real estate company. Yeah, we all know that real estate company has not been very stable last few years as the interest rates went down. The company, if we look at the operating history of the company is still losing money. If you look at here, quarterly and annual data or quarterly, the company is still losing money. The good thing is company does not have debt, but it's not making money. And the revenue is growing, but the company has not been profitable. I usually don't like those kind of companies. I don't like companies that don't make money. So I usually don't invest in those kind of companies. But if you know better of the industry, and that's different. Okay. Brian's asking, can you screen by TAM over SAM? Not sure what they stand for. Could you please use not using the abbreviations, use something that I can total TAM, total something. Yeah, I'm sure you can, as long as there are parameter. Yeah, I'm not sure what it stands for, but I'm pretty sure you can screen with that, with our customized filters. And if you can come to here and add filter, if you don't find anything we don't have, you can total assets. Maybe that's what your not sure TAM or SAM. Yeah, but if that's what you stand for, you can create customized filters for the purpose to liability. For example, total liabilities. Yeah, you can screen for with that and greater than a certain number, greater than 10, for example. Then you can you can screen with that. That's the way you do it. I'm not sure what your it's the ratio is here already. So 2 twice over. I just use that as an example how you do it. As long as their parameters can be calculated with what we have, it can be screened. Okay, let's go down a little bit more. Okay, Warren Buffett once saying, "I wish I didn't invest in Bumble's IPO." Bumbles. Let's take a look. Bumbles. I rarely invest in IPOs because IPO. Okay, yeah. Oh, sorry about that. The stock lost like 90 something percent, 90, more than 95% over last 5 years. Sorry about it. But if you look at the performance, let's look at the business performance. It always tells us something. Yeah, the business performance, the company losing lots of money. This more, it was revenues growing, but companies start to lose lots of money. And I'm sure you can find the problem if you look at our warnings. We have a warning signs here, poor quality of earnings, and admin score telling you it's stressed and earning quality is low. So it's currently in stress situation. Even without those, if you look at our 30-year financials, I always like to check the margins, the gross margin. We know the company is losing money, but if you look at the income statement, we can certainly see problems. The gross margin and operating margin. If we look at the operating margin, seems like a kind of growing line margin. Has been losing money all the time. I don't like companies that lose money, and I don't invest in those companies. So if you just stay with actually a very basic rule, the company needs to be profitable, not just 1 year. And Ben Graham had a rule that the company needs to be profitable every year over the last 10 years. Of course, this is a very new company. If you stick with that rule, you avoid lots of mistakes. Company needs to be profitable. Okay. And there's a number 3 question. Can you teach us more about screener to do manually on SP 500 stocks? For example, 20 EMA is passing 20-day EMA is passing 50-day EMA, a stock price going sideways for 50 days. Yeah, we can try that. If I come back to the screener and work with SP 500 companies only. If you want SP 500 companies only, come here, index membership, and click on here. It will only screen only from SP 500 companies. You want the technical indicator, which I'm not very good at it, which I don't use technical much. Percentage. Okay, you want 20-day. Okay, 20-day. Here 20-day SMA, 20-day EMA. Okay, EMA. Okay, 20-day EMA. I think here I have to use use all-in-one screener or 20-day. Okay, 20-day SMA versus 20-day EMA. Golden cross. The technical indicators, I don't use, I almost never use, but I don't understand them much. But let's try it with all-in-one scanner, with customized EMA. Yeah, 20-day EMA. You want 20-day EMA is passing 50 EMA, 50 EMA. I don't know what that means. It's greater or smaller, I don't know. But maybe that's a grow, that's the golden cross or something. Yeah, if you use those, maybe it will find it for you. Um, if you think that please give a try. If our screeners cannot do it, send in a ticket feature suggestion, and we'll look into it. I'm really not an expert with technical indicators. I'm um, I'm a proud student of Warren Buffett. sorry about that. Uh, uh, I wish I could help more. Okay. Next question. Small cap companies are doing really well recently. Is it a good idea to move SP 500 to small caps? Oh, that's a question. Small caps are doing well, actually, beginning of the year, and but not really recently. Not recently. Let's we can show a chart. Actually, we have the ETF chart. If we just search SPY, which is SP 500 ETF, if we look at the chart performance here, if I come to the chart, yeah, this SP 500 performance, we can compare it with Russell 2000, for example, Russell 2000 or the Russell 3000 performance. Yeah, the SP 500. If I come to a 5-year chart, actually SP has been doing well. SP has been if this year, if you look at Russell 2000 seems to be doing better. Actually, they're very similar. They're very performance very similar this year so far this year. If you look at last 1 year, yeah, they're actually very close to each other. The performance. Russell 3000, that's what I'm using, versus SP 500. Okay, maybe I should use some small cap. I just use a small. Not sure which one I should use. Small cap. Okay, maybe I use this one. I don't know. Small. Russell 2000. Yeah. Okay, I use Russell 2000. Maybe it's a better indication of the small cap stocks. And yeah, it did the index did well actually in January. In January, it did pretty well. Then since last month, if you just look at it's actually very similar. And should we move into small caps? It's a very good question. And I personally, I think we still look at the valuation of companies, and the large cap companies are relatively expensive, I agree. But the recent market moves, fear of the software companies, did create some opportunities, I think. But we can try to screen. We can try to screen from the small cap companies. And if we come here again index, if we look at Russell 2000, if I screen just from Russell 2000, and if I want, actually I can go with high quality companies first, high quality companies of Russell 2000. That's what I got. Now it's screening. Yeah, okay. Russell 2000. Still, we got lots of large companies. And if we, yeah, I select Russell 2000, but not in SP 500, for example. I want it to be in Russell 2000, but not in SP 500. That's what I do. With that, yeah, but we got quite some companies, but they are maybe some are non-US companies. And if you still want US companies only, we can screen that by company headquarters here, US only. So these are the list of companies that's in US and in Russell 2000, but not in not in SP 500. So usually smaller companies, and but also high quality. I only get only a few companies, like 6 companies here. And you can try to relax some conditions there. Um, to look at if you look at the chart, yeah, this seems to be company seems to the stock is not doing well, but the growth has been tremendous. Like Leico, don't know what they do. The growth has been tremendous for this company. CRUS, not sure it does. QLYS. Let's take a look what it does. It seems to be the stock, the growth has been tremendous for Qualis. The P ratio seems to be reasonable also. Valuation is kind of low, beaten down recently. It's probably also a software company that's beaten down. Yeah, a cloud security compliance solution provider. Yeah, it's a security network security company which has been beaten down recently by the AI sphere. Okay, next question. If I start today, where can I find how to navigate Google Folks website? Yeah, we have lots of tutorials. If you come here, there's support here and education here, actually education. We have lots of tutorials in different areas. We made lots of videos for different features. Yeah, it's under tutorials. We also have a demo center which shows you how to use all those tools, every tool we have. And if you need more support, you can always schedule a one-on-one meeting with us. And yeah, you can schedule as many meetings as you want with us, actually. And we would love to help. And someone will be with you at the time you select. And if you just select, you'll be scheduled. You'll be able to schedule meetings here so that you get help. Okay, and next question. How about the Credo Technology Group, CRDO? I don't know about this company. I noticed P ratio is 90, and it went up a lot today. I always love to see the, of course, our GF score 85, not bad. The ranking profitability rank seems not that good. Yeah, the financials, company just turned profitable, seems like. Yeah, company growth has been tremendous, but just turned profitable. It seems to be a growth story. The company has good financials, good growth, valuation seems to be high. And yeah, valuation is kind of still quite high, although it went down some. What does it do? High-speed solutions break bandwidth barriers on everywhere wired connection data infrastructure. Okay. Yeah. Oh, I think the valuation is high, but since the company seems to be growing a lot, overall seems to be a decent quality. That's my impression. Please study more. I cannot give you other suggestions. Okay, which one's better, Visa or Mastercard? And both are good, and Visa are growing faster than the other. But valuation margin of safety, V is better than. Which one is good? And I have both, and I like both. Actually, Visa versus Mastercard. Yeah, let's take a look. Recent stock price went down. Yeah, let's always compare it. Well, let's compare it with Visa, of course, Mastercard here. The revenue, of course, which revenue size, the size is different. The growth, growth. I think when Visa is Mastercard is faster than Visa. The revenue, if I just remove the price chart here, okay. Yeah, that's Mastercard is bigger than Visa things like the revenue, and which one's better? The valuation, I think both are reasonable at this point. Both are reasonable. If we look at the valuation, both okay. I need to show the. Remove this. Yeah. The valuation, they both came down recently. The valuation, the revenue, of course, Mastercard grows faster, although it's the overall the actually, if you look at the chart, last 5 years, their growth is similar. The growth is almost the same pace, and the margins. If you look at the margins, yeah, you can always search for the operating margin. You can search for any parameters here. Yeah, now it has too many series there. If I just remove the revenue, remove the P ratio, and yeah, margin seems like Visa has higher margin. Yeah, so that's why you're seeing that quality-wise, Visa is better. But although it's higher, but it's actually Mastercard also has a very high margin. So both are extremely high margin business. You can imagine, yeah, they make money just it's like a toll bridge, and Mastercard margin is even increasing, and it's actually increasing some. Visa margin is more flat. If we look at quarterly margin, yeah, or annual TTM margin here. TTM similar. Yeah, margin. Visa does have higher margins than Mastercard, but both have very high margins. And so, which one is better? I think both are great. Both are great, and I own both. Okay, next question. We got lots of questions. I need to be faster. Okay, Brian's asking okay, Brian's clarify his questions. TM stands for total addressable market. We cannot screen with that. We don't have parameter for that. Sorry about that. Okay. Warren Buffett is asking, is Bumble a sinking ship, or do you think see an upside? I just look at the number of parameters. I don't think it's really good. I think it's really not good. If you look at the parameters there and the warning signs, the ultimate z-score is negative 0.01, which is extremely distressed. Usually with those kind of z-score, and I will certainly stay away from it. F-score, slightly better, yeah. And always stay with companies that can make money. Thomson Reuters. How about this stock? Yeah, I think against AI scare story. And yeah, AI does bring threats to this kind of industry. The mode score 7, not bad actually. I think the business is doing last few years relatively consistent, and the valuation is very low at this point. I think it'll be okay. I think the stock will be okay. I think the AI scare is market is overreacting to it. That's what I think. Zscaler, we got lots of questions. I need to be faster. CS, which is Zscaler. Not sure. I'm not familiar with it. I always look at the business performance. Okay, it's turning profitable, which is a good sign. Gradually, it's turning from losing money to maybe it's losing less money, and EBITDA is getting more positive than before, but still it seems like it's losing money. And yeah, it's not for me. I don't invest in those kind of companies. Okay, can I see guru ownership history somehow? Yeah, you can always see guru ownership for any stocks. For example, Visa. Okay, Visa here, and if you come to Guru Trades, Guru Trades tab here, and yeah, for everyone there's a small chart icon. Just click on that, you will see the history. You will see see Visa. Yeah, you can see the history of guru ownership. Warren Buffett used to own lots of Visa, actually still owns it. Yeah, you can see it here. You can from the little icons, you can see it. Okay. Okay, I see a comment. I worked at Mastercard when they went public. Waited to invest in Visa back in 2008 on the IPO. Okay, P ratio 30. Yeah, P ratio is not cheap. It's not cheap, but it's a great business, and all the market overall has been expensive. Wait for bear market. Yeah, you can. I think it's okay if you wait. FICO. FICO has been used to be a very good stock, but this year has been doing poorly. And again, it's related to AI. It's also related to the policies with Trump administration. But I do think FICO will do fine. I think it's overreacting, and the FICO, the credit scores still have its unique position in consumer product. I think, yeah, I think it'll be okay. Omcom Group. Let's see, OM&I. Let's look at the business performance. Always, that's what I want to see. Okay, this company, the revenue has no growth, and start to lose money. The financial strength getting more debt, more and more debt, and I don't like it. Just look at that. It's not growing. It's not growing. And they need to invest in growth. Growth, actually, Warren Buffett loves growth. So growth is, we did lots of study. Growth is one of the most important parameter that's correlated to stock performance. If you look at this valuation tab here, that's actually, yeah, it's, yeah. Okay, we see maybe there are some future forecasted growth, but the company has not been growing for many years. Unless something change. Okay, OS how can guru activities help us with investments? That's a good question. You need to be familiar with the gurus you're tracking. And yeah, when you see they're increasing the position over time and the long term, that's always a positive sign. Also, actually, if you look at our model portfolios, we have a most broadly held portfolio here, model portfolio. This portfolio has been in history for a long time. It has been there for 20 years. I created this at the beginning of 2006. So it has been there for 20 years. This red line is the performance. This blue line is SP500. So it has been outperforming SP500 over long term quite a bit. And over the last 15 years, average about 2.5, last 10 years, average outperformance about 2.6%. But this year it has been underperforming. And this year underperformed about 4.4%. But yeah, because I think mostly related to the recent AI scare, because it owns actually Mastercard, Visa, and Microsoft. They all went down due to recent AI scare. People are scared of AI recently. So this year has not been doing really well, but over long term it has been doing well. Okay. When you start your day, how do you decide which stocks to buy? I think for everyone, you need to form your strategy, your system, and our platform, our screener will help you to do it. Create your own screeners. I personally like the screeners. Here, high quality companies and good companies, high quality, low capex companies. Those are the companies I like. So I look at those companies and to see their performance, to see which one I can buy probably today. And we also have another model portfolio which shows high quality, low capex stocks. This model portfolio has been doing well also since it's created, I think 2021, beginning of 2021. And this year actually went up. This year also, although market is down slightly, but this year this model portfolio is up. We also have this Guru Score model portfolio. That's one of my favorite too. Basically, it screens for high quality companies at reasonable prices. And this year, similar to the market, and outperformed some last year. Used to up to beginning few years, first few years outperform more, but since the last 6 months, it kind of underperformed slightly, but overall it still outperforms. So that's what I have here. We don't have lots of time. We don't have lots of time left. We only have 1 minute regarding Costco. Costco is also awesome company. Yeah, Costco is a great company. It's just valuation is too high, and valuation is so high that I'm scared. I don't want to get in at this point. And yeah, the stock is doing pretty well this year, and long term, of course, doing really well. Yeah, the valuation is high. How can revenue be presented as bars and revenue growth as line in the same chart? Yeah, you can do that with all-in-one screener. No, sorry, you can do it in the interactive chart. If we select revenue only, and you can change the line pattern here to the pattern as bar. You can do that. Now we have revenue as bars. You also want to show the year-to-year growth. I think we have the option percentage year over year. Okay. Yeah, we need to show both. We need to show both the revenue. Here is just showing the year over year. And we need to show both the year-over-year and the revenue itself. We have a chart for that. But that's a good point. Good point. I will talk to our team, and I think we can certainly add that function. Here we have them in two charts. This is the revenue. This is the year-over-year growth. But I see what you're looking for. I think it's useful. We'll create that. We'll add that. Okay. Thank you all for coming. That's what I have for today, and hope to see you again next month. Next month the meeting will be on April 1st. Okay, and meeting will be April 1st, same time, same time, 1 p.m. April 1st, and see you next month. Thank you all for coming again. Bye now.